Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello and welcome to the Smart Property Investment Show. I'm Emilie, Lauer, journalist here at Momentum Media and co-host of the Smart Property Investment Podcast, here with the best, the one and only
Liam Garman. And, thank you for doing that, Emily. I've been hosting a lot of these recently. We're doing 5+ a week. My voice is getting sore.
I know we're doing them. I'm writing the copies.
You are writing, yeah.
I
Emily's
am writing the podcast copies.
All of them. So if you've seen a great show and you want to know more about it, you can send the news article to your friends and family, written by Emilie Lauer. But yeah, Emily's gonna host today because I'm getting tired. But this is the back of a pretty bumper week of stories and a pretty bumper week of interviews. Obviously, first property buyer or first home buyer guarantee is very big at the moment. And did I just end up taking over as host myself?
Oh, that's fine.
I think I just ended up.
That's all right.
But first home buyer guarantee started, by the time it comes out, a week and a half ago. And I think it's very reasonable to say, a lot of the brokers, a lot of the BAs that we speak to, they're seeing an uptick. But what everyone's saying and everyone's telling me, don't get emotional about it. Do not get emotional about it because at its bare basics, yes, I have called out in the past that it is likely to raise prices, and it absolutely will.
It has already.
It has already. It absolutely will. But at its bare basics, really all it's doing is removing LMI for people under 20%, for young guys under 20%. Now, what has created the hype is the fact that the government's driven it so hard. So there is a lot of FOMO. And I know, Emily, you write about FOMO a lot in terms of investing and property buying, which has just meant that because of the government hype and how much the government's pushed it, you've just had now billions of dollars of capital flow into the property market.
Yeah. And I think it's all about, that adage of getting your foot in the property ladder, So you're basically building that up for younger Australians in their early 20s or mid 20s and push them to get onto that property ladder when we know that the average first home buyers at the moment is nearly 36, 37, when people have already had years of career, build an income, build on some savings, and have a little bit more of financial, literacy in a way. A little bit more, used to manage a budget and stuff like this.
Literacy is a great way of putting it, because I think what this is doing is, even with investors. Now, certainly among first property buyers, what it's done is it's created this deluge. One of my friends was at an auction, actually at the time we're recording this, yesterday. No? Yeah, it was a week time auction. It was quite odd. At a weekday auction, by the time this comes out, this would have been 4 or 5 days ago, by the time this podcast released. They had 10 registered bidders. 9 of them, well, they were all kind of taking increments. Everyone pulled out after 1 mil, and this was in Brisbane. They all pulled out after 1 mil, and my friend won the place with 1 mil, 5K.
Oh, wow.
So 90% of these bidders were first property buyers. Well, I mean, we can infer more, or either that or everyone had a cap of 1 mil.
Yeah, because stamp duty.
Yeah, the stamp duty concessions, yeah. That's also the first home buyer cap, the 1 mil is also the cap in Brisbane. In Brisbane. So there is a lot of drive, and you can see it. So on the one hand, for first property buyers, it's going to drive these emotional purchases because they hear from their friends, they hear from their family, they just got to buy. This is also very clearly driving irrational investment decisions from investors. And I've heard it from 1,000 brokers that come on this show, 1,000 BAs that come on this show, that, we're being inundated with investors like, I need to get in before 1 October. If a deal is good, a deal is good. If you're buying in an undervalued area, let's say it's like a regional area or an outer metro area, it's probably less likely that people need to rely on the first home buyer's guarantee to get in those areas. For example, if we look at Queensland, your first home buyer's grant is $30,000. Realistically, that's going to open the doors to most places anyway throughout the state with or with very little LMI, and stamp duty already gone. So if you're looking for those lower quartile kind of, quote unquote hotspot suburbs, if you're a hotspot investor, now not everyone's a hotspot investor, but if you're buying those hotspot areas, realistically, I don't necessarily seeing it changing the needle so much that it requires you to buy a place right now. I need action before October 1. Because what's going to happen is you're going to end up settling for a place which you bought out as desperation, and that's a recipe for long-term disaster.
Also, in adding to that, budget-wise, you're going to be different from first-home buyers, yeah? Investors usually have more capital. They've got already more experience. They can extract equity from different places they own. So you don't have to target that below 1 million. So spend a bit more, make a better investment choice, and you're not competing, so not paying extra value for something that is actually not worth as much simply because there is competition and demand on the market.
Which is reasonable strategy, because if you're going to be like that Queensland example, everyone's going to bid you up to that exact point that ends, at which point everything's just going to float up. Everything's going to slowly float up, which will, in the medium to longer term, mean that those houses outside of the first home buyers cap will eventually start having the capital flow into them. Just so people upsize, and people are going to have the chance of oh wow, my unit's gone up 10-15% in the last year. Now I can afford the townhouse. Now the townhouse owner's buying a house, and the capital will fly. So that is also a good way of looking at it.
Yeah, no, 100%. And look, prices have been increasing across Australia. There's been in September, so that's ahead of the scheme, which can be linked to that first property buyer scheme that is coming up, but it's also linked to lower listings and higher demand, yeah? So we've seen nationwide the strongest monthly growth since October 2023. And that's a 0.8% growth across the country, which means that quarterly we saw a 2.2 growth, up from the 1.5% in June. So that's about 18K more on an average for the property prices.
Yeah.
So all dwellings, not only houses.
And the key drivers remain the same. The basic financial fundamentals that underpin them.
Yeah, low supply, low stock, high demand. It's just the basics in a way, yeah.
And the supply stuff, looking long term, the supply, obviously we've had a lot of state governments come out as a priority to try and increase supply. Speaking from a New South Wales point of view, in New South Wales, they've had the release of the New South Wales patent book, which is several pre-approved designs that in theory you should be able to get expedited DAs through. We've seen major rezoning around metro stations, around train stations, that you will have approval to go to high density. Despite all of this, approvals are actually dropping. Relative to, I think it's last year, approvals have remained lower. And the greatest irony behind all of this is, so approvals are only part of the equation. And I think we actually put too much stock in the approvals argument, because just because approvals have been granted doesn't mean that they're coming through. Last year we saw approvals go up quite a lot, but at the same time, house prices have still kept going up. There's a lag, firstly, that just because it's an approval, it still might mean, several years until the property is actually developed and hits the market. They also might not be built. You might not receive funding for the house. You might not receive funding for the unit building, or your funders might pull out and fund something different, which is increasingly risky and increasingly true, especially given that the cost of building a house has gone up about 40% since COVID. So we're almost talking about,
double the price.
Yeah, double the price almost. So it's a substantial increase. So a lot of those approved projects just simply aren't happening. So that's one side of the equation. The other side of the equation is, well, why are they not coming through? So one of the greatest ironies of this increased government expenditure that we're seeing in infrastructure is, I think we're all benefiting from it. We're all enjoying it. You know, when I drive around Sydney now and I can get to the M4 in a third of the time because I'm just going through all these tunnels, it's fantastic from a livability aspect. When I'm able to go shopping at a different Westfield in Sydney, I can hop on the metro and it takes me 1/4 of the time to be on the metro than to drive. Fantastic. The livability's gone up. What this does, though, is it takes tens of thousands of tradespeople from what is already quite a constrained trades pool, the tens of thousands of tradies to execute these. What we know is that the government always pays a lot of money to its employees. I'm sorry to any government employees that listen to this, but it pays very well relative to the private sector.
Let me tell you, it's the same in every country.
Oh, it's the same in every country. But you know, they run a decent wicket relative to the private
100%.
sector. And there has been no shortage, absolutely no shortage. Now, not necessarily that all of these tradies are directly employed by the government, but what they do have are multi-billion-dollar government contracts, which the developers have baked in their premium. So this is being proven across, you know, countless of economic research papers that the amount of money that the government's spending on infrastructure is actually stifling our ability to build properties. So, what does this mean? This supply shortage that you've already identified, where listings are at their historic lows, Darwin down 53%, Perth down 45%, Brisbane down 31% below their average. They ain't going to lift anytime soon. It's not like you've got all these magical houses that have been hidden from eyesight that are going to suddenly come online. And a lot of them that have been built on the fringes of outer metro, outer urban areas are simply lacking.
Yeah.
They're ironically infrastructure. Because they're built, you know, a lot of the stories that we hear, you know, you bought off the planned place in outer Western Sydney like an hour from the closest school.
Yeah.
So from that perspective, I don't see supply actually catching up.
No, and you know, additional reason like that we've seen, you know, with our sister brand publication, REB Real Estate Business, is like people are afraid to list their current house because they don't want to jump on a crazy market.
Yeah.
Because they know their house will be sold in an instant, while it will take them so much more time to buy something. So like people are waiting now to buy first or be in the process of buying before listing their own house or their own units. So that's, you know, creating even more issue with supply. Another one that has been kind of like, I don't want to say picked on, but like pointed out is downsizing.
Yep.
So there's a lot of issues with downsizing because there's a lot of people that have extra bedrooms in that they're like boomers and stuff, which extra bedrooms, and they do not need them anymore. But there's a mad issues for them to downsize. There's like not that much opportunities or living retirement, or it costs them too much money to actually sell the property. So it's not freeing up any space, because if people downsize, then family upgrades and those new apartment or smaller house on the market can be either used for first-time buyers or for downsizers. So it goes back in the economy. So that's another issue that limits supply.
Yeah, for sure. We're seeing that some of the cities are moving in different directions. What are we seeing from the cities?
Yeah, so look, on average, everybody has seen an increase over the months of September, so a gross increase. Now, it definitely depends on where. So Darwin was the biggest and the highest growth with 1.7% in September, followed by Perth, 1.6%, Brisbane, 1.2%. Then we had Sydney with 0.8%, Melbourne, 0.5%. Oh, I forgot Adelaide, 0.9%. Canberra, 0.7%. And the smallest increase we've seen was Hobart with a 0.1%. So it's still an increase, So no one is going backwards. It's for certain cities is more than what the historic growth has been. So I think it's a pretty good indicator that the market has been moving quite fast and it's quite hot at the moment.
So two of the outliers, Perth and Brisbane, probably unsurprising to a lot of our listeners. I'm not going to dive into Darwin at 1.7%, but the Perth and Brisbane markets primarily led by unit growth.
Yeah.
What are you seeing with that?
Well, we've seen a surge in apartment sales in 2025. So we've had a 42% of all properties transaction nationally from January to August being apartments, being units. A couple of reasons for that, like we've got affordability issues, units definitely cheaper than houses. Lifestyle, people want to stay closer to, city CBDs or closer to, I don't know, like the beach or like a specific, neighborhood that they like where, housing and house is a bit trickier to get. And government incentives, so like all those schemes, which allows you to stay under a certain limited cap. So now out of all the cities, and again, without any type of surprise, Sydney is leading the way with 51% of the transaction being apartments, including 53% of units in the June quarter being bought by first home buyers. So first home buyers are definitely leading the way in terms of buying units. Then Melbourne was at 37%, Brisbane 42%, Canberra 40%. So it's still quite a high, strong unit demand there. And unit sales are just, increasing. Also, what you're developing, like the latest developments are more, like units than houses anyway. So
I do see there being a bit of an arbitrage play here for our investors, which is that now, yes, obviously your houses have something that units are, which is the land and the underlying value of the land, the scarcity, because this is a scarcity game. But given just how much houses are overvalued relative to units and just how much that gap is growing, and the scarcity of the houses and the fact that, units really haven't grown exponentially in a lot of areas, I do think that for a lot of investors that are looking to move into that cash flow, move into that yield, that they're or that kind of consolidation phase, I guess, of their portfolio, that there is an arbitrage play here for apartments, given that, right across the country, you can get some fantastic yields in apartments. So I do definitely see there being an arbitrage play there for people if they so want it.
And look, it depends on which area you're targeting to, but in some areas in Australia, units are actually had a higher growth than houses. So again, it's all about numbers. It's all about looking at the data. It's all about looking at, what's happening, which infrastructure, where we're building. Is there a lot of houses? Is there a lot of developments? Just do your due diligence, talk to your team and make the right purchase.
Yeah, for sure. Now, you've also done some recent research into some of the top mistakes that sellers are making.
Yeah, look, I think, if you are in a position to sell your property, you're going to get a good price right now. But it's all about selling right. So of course, having the right appraisal, because you don't want to start chasing the market.
Yep.
And that's something you're going to have to work out with your agent and looking at what, other houses or other units or comparative sales. That was a hard one. I've been, in your neighborhood or in the closest suburbs. Yeah. So do not play chasing the market by changing the price constantly. When you put the price down, it does always look bad, and you end up losing between 20 to 30% of the price you wanted.
Yep.
So put a realistic price from the get-go, and then, you'll have the right buyers coming to your doors. Now, poor presentation.
Number one.
Poor presentation. So leaving your house or your home cluttered or empty. So we know that staging actually is, you got to spend a little bit money on staging, but you're getting back a tenfold. So having a right presentation of the property, giving buyers an idea of what it can look like, helping them to project themselves, always a good idea. So styling that enhance, like the emotional appeal that ultimately boosts the sale price.
I did a really good potty with someone who stages properties on REB, on Real Estate Business, a few months ago. And like the takeaways were so good because you're right, it is finding the balance between clutter and empty.
Yeah.
And she said, so many sellers in trying to try and get rid of the clutter, they make it too empty, which is, hey, there's like a little nook here. Just put a
book,
small
but
put like a small table and like a desk and a computer there, a laptop there, and it could be a very unstable laptop, a little table, and a little wheelie chair. And she's like, well, it's just showing the art of the possible. Now you might think getting rid of it makes it look bigger, but here now you're able to list essentially that there's a study nook, right? Or on the flip side, one bit of advice that she gave was when selling a house, there's a lot of personal touches that we all have in our houses, and it could be wedding photos, or it could be the name on the door. When you have name on the door for kids, and she said psychologically this just creates a barrier for people seeing themselves there because they become very conscious. And I think it's a very fair observation. They become very conscious that walking through someone else's home, and it creates that barrier for being able to see yourself there. You don't necessarily need the most modern stuff. You don't necessarily need the nicest, coolest, most techie, cool furniture. You just need a demonstration of what this looks like without it being overly personalized. And I thought it was fantastic.
I think you need a home, basically.
Yeah.
On that note, so I think staging is one point, but I cannot remind our listeners that you can do like small, cheap DIY, like a reno.
Glow-ups.
Glow-ups.
I don't use the word reno.
Look, I'm still like looking for my renos, so that's why like it's on my mind. But like the glow-ups things, like new carpets, new paints, like how to increase, the space, like, or put some mirrors, or like do some stripe.
Very easy stuff.
Like very easy that you're gonna spend like maybe like what 4 or 5K on it, and you're gonna get 40 back. So do not cheap out of that property just because you're living it. Like invest a tiny bit more and get back a better price.
Yep.
And now the third, the second one was the overpricing, chasing the market, but we touched on this one. The third top mistake seller make is having a misconception on when it is the best time to sell. And that was quite surprising because everybody's been waiting on spring market to be able to sell their property. And apparently spring is not always the ideal time because, historically in spring you've got more listings. This year's maybe not. But the best time to sell is when competition is low.
So ironically, this spring is a good one. But no, that's very reasonable. If everyone goes on the market at the same time, thinking that they're going to get the best price, then you've just got more competition.
Yeah. And look, talk to your agent, talk to your broker, talk to your team, and make sure you've got like an idea of what's the market looking like at the moment before you put your price on. And make sure you look at what's been selling in your neighborhood.
Yep. And the role of the agent.
Yeah, so agents needs to guide you through presentation, pricing, timing. Make sure that your agent has clear and transparent communication. That helps you, the vendor, achieving the best outcome. Yeah.
And interview them.
Yeah,
Ask them
interview them.
questions.
Look, don't go and that's one of the things. Like I spoke to an agent.
Don't do that.
On REB, for our sister brand publication. And she was telling me that she's got higher days on the market
Yeah.
for selling properties. And, like sellers always look at the days on the market as a good indicator of an
Success.
agent's value. Yeah. She told me that sometimes those days on the market can mean the agents actually bargain the property price. So it bargains them down.
Oh, as in, accept, yeah.
Yeah, like just to make sure like the price.
Oh, probably.
Like and his days on the market are not impacted the agent's day, yeah?
Yeah.
She told me she's got a little bit longer days on the market, but the reason is because she always gets
Higher result.
and higher
reasonable.
price.
Yeah.
So look at all of these indicators, testimonial online. Look at your community to find an agent. You want someone that has expertise within the area, that knows what's happening in your neighborhood, that knows the best spots, because you kind of want to, entice the buyers to come and live there. You could sell the dream, basically.
Yeah. Yeah, no, I agree with that. I think that's a very reasonable point. Now, what we have also seen, which I'm sure is of acute interest to a lot of our listeners, landlord maintenance under scrutiny.
This one is a little bit of an interesting one, especially in WA. So the government in WA just came out with kind of like a report, a release that tenants' complaints have actually tripled in WA, with 77 complaints in this year alone, comparing from 21 the year before.
And these are for quote-unquote unfit properties.
For unfit properties. So basically, the Consumer Protection in WA found that landlords and property managers, they might be breaching tenancy laws by failing to repair, maintain, and clean homes, either when there is tenant there or before tenants move in.
And there's so many, just in that one sentence, there are so many lessons. One,
maintain your property.
Maintain your property. Genuinely, if you have tenants move in, I saw this, oh my gosh, downstairs from me, where one of the landlords in the building I live in actually got rid of someone. It was and they used clearly false pretenses. It's like, oh, I'm moving back into the house, and then suddenly I see everyone coming through for viewings, and I really like the people they booted out, but it was untenanted for about 8 weeks because they came in and they went right to the top of the market, right to the top. And it might have been actually long. I think my wife and I calculated it might be 9 weeks by the end. But realistically, 9 weeks of your place being untenanted is a lot of money.
Yeah.
And that's coming out of your back pocket. So if you're either negatively or positively geared, it doesn't really matter if you've got a mortgage at all. Like, this is now coming out of your back pocket. So treating your tenants with a modicum of respect is really important, because they're happy to be there for the long run. And if in the future you do have those modest and realistic price increases, it means they'll probably take it, and they've got enough respect for you, and they will stay, so you don't have those 10-week gaps.
Also, look, it's a couple of things there. By maintaining your property on time, you're avoiding larger repair costs.
100%.
Like, let's say you've got a leak, yeah?
Especially in bathrooms, with water.
Oh my
with water
God,
stuff.
yes.
Yeah.
Look, you've got a leak. You're waiting for that leak to be repaired. Then what's happening? Waterproofing issues.
Yeah.
Gonna do the whole bathroom again.
Yeah.
Looks bad on the tenants. Show them that you're a responsible landlord that's is looking after their property. Respond to their request when it's about maintenance, and they will look after your property more.
Yeah, the water stuff is wild. Just leaving it. It's you're probably gonna need a new floor now. It's just like, why did you not fix this? And I get it. No one wants to part with $200-$300 for someone to come in and fix a leak. But man, it is so much better.
Okay, so couple of data points for you, yeah?
Shoot.
Water leaks is the top problem, with
Is it actually?
23% of renters
Yep.
talking about water leaks.
I mean, that's what I would have assumed.
Broken appliances, 17%. Mold, water leak,
Yeah.
16%. Structural defect, 13%. Now, couple of data. 44% of renters have waited longer than reasonable for their landlord to fix their issue. 17% waited over a year.
Wow.
11% waited from 6 to 12 months. And only 9% said they waited less than 1 month before having repair.
Yeah, like my renting is always the stuff's. I've always been that 9%, but this might be the 9% of people that are. I don't know, that were willing. Maybe it's a bit skewed. Maybe if you've had such good experiences, you're less likely to take part in this survey.
I guess it depends on your property manager.
Yeah, and that was the other part,
yeah.
which is as landlords, we can't accept all responsibility for this. Now, in terms of maintaining a house, yeah, of course you do. But a lot of the time you actually just might not find out. Like, and if your property manager is not doing their job, you find a new one.
So a couple of funny story, yeah?
Yeah.
So I saw my friend over the weekend, yeah? And back, remember I think it was in August when we had that massive storm in Sydney when it rained for 3 days.
Yeah.
And we had the storm going the whole night.
Yeah. Which one? There was a lot.
Yeah, one of those ones. And they had a lighting coming to their outdoor lights. So it basically, the lightning broke the outdoor lights.
Oh, yeah, right.
And it basically, it's not working anymore, yeah? So my friend shoot a message to his leasing agent, yeah? A month later, the property manager of the building started taking pictures from, the streets about the balcony. My friend got an email, being like, hey, your light is not working anymore. What's happening there? The leasing agent replied, oh, I'm sorry. I'm going to fix it right away. My friend was like, hey, Dean, it's been going on for months. This is the proof.
Yeah.
Don't make me the bad guy.
Yeah.
So be careful who you're using at and double check their reputation, because sometimes it's not that the landlord doesn't want to do the repair. They're just not aware of it.
They're not aware of it. 100%. Yeah. Yeah, without doubt. So what are some of the other data points that we've got coming through?
Well, we've got so leaking roof, plumbing issues, mold, pest infestation, broken appliances are some of the top things happening in terms of maintenance that are not being repaired. Now, another report that was a couple of months ago showed that in terms of the highest cost of maintenance in property in Australia was 864 million for burst pipe. Yeah. Which is, again, we're going back to our leak issues. So water issues are definitely the top issues. Only 26% of homeowners inspect their home annually. 13% never check or inspect when the issue arises. And 16% do quarterly check. Yeah. Which I think once a year or once every 6 months could be more reasonable. Now, the barrier to maintenance from property owners is by 36% lack of knowledge or skills, 32% by the cost. But again, if you're waiting too long, the cost increases. So, 23% thinks it's unnecessary, and 18% said that they are time poor.
Man, these excuses aren't going to hold up
I
before
know.
NCAT or VCAT, that's for sure.
60,
or WA-CAT. I don't know what they have in WA.
Look, 63% said that they are trying to do it themselves without professional help. So they don't want to pay for a plumber or something like that, which is wrong.
Yeah, that's not going to hold up in front of the tribunal.
No.
No.
That last data bits, by the way, it's nationwide, not only
WA.
We're not
just in WA now. We're going nationwide. No. Yep. Yeah, that's not going to hold up at all. Now, on that note, we've had a bit of a rapid fire of data today.
Yeah, we had. The market is, moving quite fast. Yep. And look, the editorial Smart Property Investment Show are all about, bringing you the latest news about what's happening in the industry, on the property markets, in your pocket, the whole shebang.
Make sure you like and subscribe. But I think that's all we have time for today. Emilie, you hosted us, so I'm going to let you sign us out.
Yeah, well, that was the first. Oh, no, not the first.
It wasn't the first. Just for background, Emilie is the host of the First Property Buyer Show. So we always revert back to that. That was the Smart Property Investment Show, and that is all we have time for today. We'll be back at the same time in 2 days, I think. But until then,
bye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.